I think one interesting dynamic that's happening right now, and this is something that's happened historically. I'm going to put my old Wall Street investment strategist hat on, is that in periods of heightened volatility where you see the VIX, rise significantly, and then you also see bond volatility rise significantly. So if we look at the VIX index, which measures a 30-day kind of like variance swap of the S&P 500, it's ranging between 30 and 50, right, on the index level. If you look at the MOVE index, which is the ICE BAML interest rate volatility index, it's also pretty elevated. And historically, what you find in those periods is that gold tends to catch a bid, right? And if we look at Bitcoin and its recent relative strength, I'm starting to connect the dots here, because we also measure the implied volatility of Bitcoin with our BVX index series that we have on CME Bitcoin options. And that has actually been absolutely steady throughout this period of uncertainty. So Bitcoin volatility, as measured, through the implied measure of option market participants on the CME, has actually not moved significantly, whereas the stock market implied volatility and the interest rate implied volatility has moved. And so it makes kind of sense that, in that type of dynamic, Bitcoin's actually kind of following gold's path now. It's becoming this alternative, this safe haven asset for geopolitical uncertainty. And it's something that we talked about in our outlook, where we were saying, as we kind of turn the page into this new equilibrium, that it would be fair to say that you're going to see heightened volatility across markets, which is, of course, is going to impact risk models for sophisticated investors. But overall, this could create a very favorable, long-term shift for Bitcoin and its dynamic and how the world views it. And so I'm like, it's got me a bit excited. And I think that, having this conversation with you, David, and the rest of us here, it's kind of like, I think things are starting to click here.